Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap, where we take a look at these markets and we're doing it from a neoclassical perspective. That means each time we're asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursdays, broadcast at before 10 o'clock Eastern Time, archived on YouTube. It's son of a channel LA Little, and if you haven't subscribed and you want to, just reach up in the right hand corner, hit the subscribe button. Anytime I push public content, you'll get a notification. As far as what happens in these markets today, well, trying to break it out, folks. We've been consolidating for 2 months. Breakouts starting to take place. You can see green right across the board. CAC's up 1.3%. You had the DAX up just slightly. On the Swiss exchange, almost 0.5%. If you look over at our markets, NDX leading again along with the NASDAQ. The S&P up almost 3/4. We had, what was that, 2/3%. We had the Russell was the breakout, not so much the breakout, but the big move, 1.6%. But in general, it's the NASDAQ and the NDX that is leading us higher, and that lead continues. Let's take a look at the charts. We'll start here with the S&P 500. If we look at the S&P, what is it doing? It's coming up and attacking that swing point high. That high is at 2282. You got up to about 2284. You got over it, back under it, but you're pushing more volume as you come into it. You had 33.3, you do 38. That says it's going to try and attack it again tomorrow, I suspect, and try to break it out. So you've got the breakout in effect starting to take place here on the S&P 500. If you look at the NASDAQ already has broken and continues to stretch to the upside. And if you look at the NDX, you've got the same thing happening there. That's tech leading you higher, and that's usually a good thing. If you look at the Russell now, the Russell, if you remember, we had talked about the bearish breakdowns, or actually the bearish retest regenerates. Many times those regenerates will show you what's happening, and if you look at this one, this is your bearish retest regenerate. It's right here on this bar. As you come back through it today, you trade over it. Now you have a second one that's over here. It's a little bit higher, and it's trying to get over that one, or actually trying to test into the top of that one too. If you get above them and you stay above them, then you can say that this trend is no longer sideways, or actually it was down here, right? It's no longer down, but instead it's sideways at worst. More than likely, this thing's going to try and break higher. And so we've got the clues starting to come in finally, telling us that indeed our thoughts of this market probably trading to the top side, in fact, are going to happen. And as that happens, you're getting breakouts elsewhere, and you've got enough resets at this point to let this market go higher. We've talked about resets like in the financials, for example. Here's what the financials look like today. They're coming back and they're attacking the breakdown bar, 2235. It gets to 2238. Doesn't quite have the volume yet. Tomorrow's going to be a key day for it to see if it can break over it. If the financials go and the technology goes, right, and here's the XLK, those are your two biggest sectors. If they continue to push, you're going to see a larger push in this market. What I like about what I see is that the fact that you had to consolidate for a long period of time, right? And that consolidation, as it took place, allowed this market to trade off that big move that took place back on the November election. And so when I go back here and I draw that in for you again, you know, when your angle of ascent is so steep, right, or even when it gets to here, that's still such a steep angle, you're not going to be able to sustain it. So you can work it off in two ways. You can either retrace or you can go sideways. This market chose to go sideways. When it does that, your angle changes, and as your angle changes, that gives you the opportunity to take and lead this market high. And that is what we're seeing. This market now on the cusp of breaking out of a long consolidation, almost 2 months of consolidation across the top. If in fact it does break out, folks, it can get another leg to the top side. If you pull over the weekly chart and you look at it and you do the same angle of ascent, you can see this angle as it went up was too steep, right? So now you've worked it off a little bit more. Now, you know, 45 degrees is down in here somewhere, so we haven't worked it off completely. but the angle is not so steep anymore that you can't continue. If you go back and look at one of these, for example, when you saw this back here make that kind of a move, if you go long enough, right, and you get enough of a retrace, then you can actually get an angle of ascent that's not nearly as steep, and then of course you can put on another strong move. And so that's what we're looking at here. Can they put on another strong move? That's the question. What I like is what I see, and that is that supply was not sufficient. In other words, the sellers just weren't there. They weren't able to push this market down. They consolidated instead, and now the buyers are creeping back in one more time, going to try to push this higher. If they get the breakout, there's going to be pressure to buy. That's usually the way this works. That's what I'm looking at tonight. That's what I'm seeing. If you're not in this market, or if you're fighting it, you're on the wrong side of the trade, folks. You don't want to be on the wrong side of the trade. Get on the right side. This right side is the long side, and get some inventory in your pocket if in fact this thing does break out. So that's it for tonight. I'll leave it at that. Have a great one. I'll catch you tomorrow. Good night.